Okay, and we are live. Good afternoon, traders. It is December 12th, 2023. S&P futures currently we're on the March contract, 47.01 and a quarter, up 22 and three quarter handles. Uh, Nasdaq futures 16,599, up 149 and a half handles. What an excellent way to end the session post CPI and into the FOMC rate decision tomorrow. The dollar has basically, after its explosive move during the CPI, you had a bit of a two-wave corrective into 104.08, has done nothing but drift lower all day as the 10-year and 2-year um, basically followed suit. You can see here very similar pattern in the 10-year, just lower all day. The IWM today, let's look at the daily. Another inside day, closed basically near the open. A little bit of a hanging man. You still have a bullish context here. It looks like a reaccumulative consolidation, and then you have your next target in the IWM at around 191.88. So watching that as the next level. The diamonds, wow, what a move. We're so close to all-time highs on the diamonds. Look at this, it's around 369.50. So we're about three points away there from all-time highs. Spiders, new highs on the year. I think new 2-year high, right? Almost. Definitely a new high of the year. And the SPY closing around 464.10. The triple Qs also new high on the year today. We're coming into a very close to all-time highs territory here again. 408 and three quarters thereabouts. So really good stuff today. The VIX, I believe we're under 12 the time of the cash close. Gold, so far holding the 50 here. Watch 1990, 1991, 30. Crude, got Clobert, good and hard. 67.12, your prior value area low of this pivoting accumulation. So rough stuff there for crude. As far as the sectors are concerned, we had leadership today in the XLK as we saw money rotate back into tech into the afternoon trade. XLI Industrials also held up pretty well here. Financials doing pretty well on the session as well. Communication services lagging, really weighed by Google in my opinion there, the XLC. Materials, kind of a weird open. Housing, home builders not doing much on the day. And XBI, finally, we're expecting a potential bounce here on the XBI. Beautiful bounce off the lows. And XBI back over the daily 200. So real laggard continues to be the TAN, the Solars. Carry, you have a major breakthrough. This topping pivot here, 49.56. So watching the carry looks like it wants to go higher. So watching that for sure. Bitcoin did not rally with the market today, and you can see we've got an inside bar and a potential breakdown through 40,247. So that could be a thing. We definitely need to be on watch there. So that is the long and short of it. As far as the indices themselves, Dow Jones up 0.48%, S&P 500 up 0.46%, Nasdaq up 0.70%, gold up 0.08%, WTI crude settles 68.79, the VIX 1207 at the time of the cash close, and Bitcoin at the time of the close 41,520. We had our CPI report. CPI came in CPI month over month came in 0.1% higher than expected. Year over year came in line, and so did core month over month and year over year. Redbook sales came in at 3.4% year over year, and plus 3.2% month over month. We had a Treasury, a 30-year bond auction that really gave the market a pep in its step into the FOMC reading tomorrow, and the Treasury statement came in at minus 314 billion versus the minus 301 expected. In headlines today, this one was a little shocking to hear. Biden says Israeli PM Netanyahu has to change his government. That is a drastic thing for a head of state to say, in my opinion. Ariel Investment says Magnificent Seven stocks could underperform while neglected names rebound next year. Chinese leaders vow to step up support for flagging economy. Biden says CPI shows continued progress against inflation. Fundstrat coming out. That's Tom Lee. The entire rise of core CPI was due to cars and housing. Hopefully, in FOMC, these services figures are distorted by car-related services. I think he meant to say aren't. Bottom line, we are buying this dip. Tom Lee saying we are buying this dip is like my pit bull saying I'm biting this postman. Not terribly impressive statement there from Tom Lee. That being said, we'll see what Jerome Powell has to say tomorrow. We have a summary of economic projections tomorrow as well, right? I believe. So we should be able to take a look at the dot plot. Yellen, rising real rates may impact Fed decision on rate path. Yellen coming out also saying no evidence that inflation is becoming ingrained. Oh, really? I have an omelet I'd like to show you. Or that there is a wage price spiral. Okay. Yellen also saying labor market remains strong but is cooling. Sees no reason why inflation shouldn't come down to Fed's target. On Paramount Global mulling 1,000 plus layoffs amid Shari Redstone's talks to sell the controlling interest. Harvard board says Claudine Gay will remain president after anti-Semitism hearing backlash. Amazon to defend iRobot buy at December 18th EU hearing. Ridiculous. Whatever. Futures contracts tied to Fed policy rate price in March 2024 start of Fed rate cuts. That's aggressive, man. Fed should stress test U.S. banks for China war risk. House panel says, by the way, is it just me, or is the fact that futures contracts are pricing in a Fed rate cut in March kind of foreboding news for the market? I mean, they'd cut this early if something went terribly wrong, right? Or is it just me? I don't know. We'll see. Microsoft targets nuclear to power AI operations. This is, I believe, the plot of Terminator 7. Goldman on CPI. The trend in trimmed inflation continued to fall, and we tentatively expect core PCE prices rose just 0.14% in November. We will update our estimate after tomorrow's PPI data reported by Carl Quintanilla. Path and call activity today, the December 25 calls, activity honored by the offer expiring December 15th. CTVA, the January 47 calls, activity honored by the offer expiring January 19th. And then we had Pfizer, the December 2950 calls, KWeb, the May 30 calls, Macy's, the December 2050 calls, Taiwan Semi TSM, the March 100 calls, RKT, this one's been getting some call activity, the December 2022 $11 calls, and CCL, the December $18 calls. So that is the long and short of it. There were some SMH puts today. The SMH March 155 puts, activity on the offer, 6,000 contracts, and Disney, the December 91 puts. So that is the short and long of it for today. We had I think a productive session in the markets. This morning I took a couple of trades right off the open. I was looking for Amazon to trigger this beautiful buy setup, which it ended up doing. But in the meantime, we triggered and then failed to hold 146.20, so I took it off for a small loss. At the same time, uh, on the break of the pre-market pivot, shorted Tesla early around 238.12 for the move to 233.81. Beautiful opening range breakout to the downside, covered right into the demand zone, and proceeded to reverse uh, off of 234.42 for the two-wave corrective back to the 5-minute 21. Classic trade in this room. The climactic sell-off into S2 pivot and the two-wave corrective back to the 5-minute 21. It's like a signature move here. You can see beautiful this Tesla here, descending triangle. This is the second trade we took in Tesla for the reversal. So good stuff there on TSLA. Um, Great stuff. I think we took it here, sold, and then bought it again on the flag break into 236.99, and then I think trailed out. I shorted it again here um, for this move lower here, just a quick scalp. PDD took it right off the open, off the micro edge. Huge winner today. This must have been at least a 3% move into, yeah, 2.25%. Not bad for an intraday move. We're still long PDD in the swing account, but this was phenomenal. So took some off here, and then exited the trade at around 146.97 into the close. Really nice trade. Entered around 144.25 and sold the bulk of it around 147.10. So really nice trade there in PDD. And then we took AMD. AMD, what was that? Fool me once, shame on you. Fool me twice, can't be fooled again, or whatever it is. So I was cocked and locked on on AMD today. I wasn't going to get punked on the same pattern twice. Took it right there through the clearing bar, 134.50, and we sold some into 136.90, and then some had a runner. We sold some at 135, 138.50, 139, and then I wasn't paying attention because I was chasing after other shiny objects, and we got close to that 140 target, and then I just trailed out right here. So really good stuff there on AMD. And we had a lot of other notable movers today. CrowdStrike had a good opening session as well. Same pattern, right? Compression, piercing reversal, opening drive. Zscaler, these were on the watch list today. Compression, this one was perfect. Look at this. I mean, I know you had a couple of topping tails here, but this was leg one, leg two. Hardly a change of angle of ascent there. Beautiful move in Zscaler. You got your measured move almost perfectly on ZS. And then finally, Palo Alto, which also, I think, tagged 303.50, I think. Palo Alto, sorry, no, my bad, 307.50. Just monster move. Look at this base here, building out, little shallow cup, handle, little VCP into the close, and kaboom. Very nice. A bunch of you guys took it. I missed my entry, but glorious, glorious it was. Another winner. We were watching these cloud plays for a potential fade, and that's exactly what CRM did, right? So CRM opened off the 5-minute 200, took the neckline here, and just exploded higher. Our target was this upper line here, 256.45, this red line, and it tagged it perfectly into the close. I did not take this. I missed my entry again. It's like when I'm running an open house, it's a little harder to manage my trades, but unfortunately, this one went without me. But you can see here, how beautiful this move was. This had neckline break, pop, consolidation, and pop into a target there on the final. Our tech names also moved today. NVIDIA another piercing reversal flag and popped right off 469. We called the secondary continuation entry at 472 for the move to 473.96, and then you got one leg higher right back into the top of this prior consolidation around 476.82. That was beautiful. Apple managed to come off the lows very nicely here on a basically a two-leg break, and Microsoft managed also to stave away prior lows and finish right into this prior top here around 374.46. Meta also, you can see here kind of a goofy inverse head and shoulders, and it just took off like a bat out of hell this morning, 1 and a 2, and you know it likes to test this upper trend line right here. You can see that right there. So great stuff from Meta as well. You know, looking, you know, I did very well today in terms of the P&L, and my hit rate was phenomenal. I took one loss this morning on Amazon, and pretty much everything else was either a scratch trade, a small win, or a big win. So I'm pleased with it, but I'm a little frustrated that I missed some of these continuation setups in Meta, CRM. Kind of annoying, but regardless, we really nailed AMD, and you only need 1 or 2 good trades every day to make a living, right? So there it is. That was our opening drive, and we really nailed that one. On AMD, I tried to take the this is more or less a bull flag, and you know, I tried to take the snapback trade back to the VWAP anchor, took some off and then trailed out of the rest, and then bought the 2-minute 200 here again for the 2-wave corrective bounce. And now this wasn't exactly 2-wave corrective. This was more of a pop, bounce, retest, and then another leg higher. But you know, the first target was this 137.50, and you know, basically the anchor coming off the highs, and then I held some more into potentially 138.40, and we missed it by like 10 cents, unfortunately. But overall, pretty good scalp there into the close. So really good stuff today. The market really coming together after the 30-year bond auction. That's why, you know, I told Amber I'm very hesitant about doing like a technical talk on footprint charts in the middle of a CPI and a 30-year bond and auction, because I knew the market was going to move. So I think that was a good call. Yeah, no, I'm glad we did that, Amber. So Amber was graceful enough to allow me to reschedule that for Thursday. So overall, great day. Very pleased with our analysis of the market, and you know, we're able to capitalize on some nice moves. I called a lot of good NVIDIA and Meta entries. I didn't really participate in NVIDIA very much. I took a couple of NVIDIA scalps for $1 and then $1.50, but you know, today worked, I guess. Okay, so got a couple of emails here. The title of this email is "I keep running out of rugs." So one of the emphasis of this room that I really try to drill into traders is to really think like merchants and not like technicians. I want you guys to really envision trades outside of the pure technicals. You know, what is a good deal? When do I want to short something? Is it really overvalued, or am I just playing some rinky-dink candlestick pattern in an uptrend? You know, so that's why this title, this email is entitled that way. So this trader says, I have a new issue that I've been wrestling with: lack of inventory. Okay. When I get a good trade going, even if I tear out, I'm running out of inventory before buyers are gone. Seems like a great issue, but for me, I am building up toxicity in my next trade, resulting in digging in, ignoring stops, and failing to manage money properly. Example: I ran out of AMD at 136 while it ran to 139. It was so hard not to FOMO back in and chase. Okay. I know the solution is to stop being an idiot and manage my money better. Okay, I wasn't saying you're an idiot. Let's see. But while I'm learning to better manage winning trades, any tips on the mental side? Or tips on what to do when all merchants are selling to tourists and you have no inventory left? What do you do in these instances? Look for reversals, scalp smaller time frame. Okay. So, the first thing I would say, um, 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 so the first thing, so a lot of traders tend to doubt themselves when they're wrong, but they also tend to doubt themselves when they're right. And this is a problem. It's a problem when you're in a winning position and you're doubting yourself. Am I in the right trade? Okay, I'm up money. Should I stay in this trade? What are your criteria for staying in a trade? Okay, this is really important. If you're out of AMD at 136 today, this is an example. I don't know where you took it long. We took it long at 134.62. Okay, so here's the levels, right? 134.62, and then we had one pivot to get through right here at 135.03. All right. So, there 136 was right here. Okay. Into this topping pivot. I remember somebody said, okay, it looks like NVIDIA is coming in. We got a shooting star, and I said, I think that's out of context. We're still in an acute uptrend here. So you need to develop certain criteria for yourself and rules for, okay, if you're in a breakout in a trade that's working and a trade that's moving and is giving you every indication that it's going higher, you have to develop a criteria for when to exit the trade, right? So so you have to look at a trade and say, okay, this is what I'm looking for. At the point where I hit my target, oftentimes you'll hear me say, okay, guys, this trade is at target. I'm going to go into a runner size position and see if we can hit some additional upside targets, right? On AMD, that resulted in basically trailing out in the 139.40s, I think, when it came back in. So you have to really develop a methodology for yourself in terms of what you're going to allow a trade to do. So when you enter a trade, right, like say AMD, I don't remember what our initial target was, honestly. Let's take a look at the 5-minute. I was probably looking at some floor trader pivots. 136.97 was our one. So say, for example, we take this piercing reversal through here. We clear the prior days, our 3 pivot around 135.06. And this thing is here. It's not putting in any lower lows on any bar, right? There's no bar with a lower low. Okay? So this is, in terms of price action parlance, this is a breakout, right? So if that's the case, right, there's your initial target, right? Once that target is reached, I ask myself, okay, the initial potential I thought this trade had, okay, has been achieved, okay? So then I go through my OODA loop, right? My observe, orient, decide, and act. And I ask myself, okay, does this trade, given the technicals we're now given that we didn't have prior to the point where we took the trade, right? Because when we took the trade, we didn't know how this was going to move. So to say to myself, okay, based on how this is moving, is my initial target relevant, or does this move still have potential to go higher? If the answer, so, we'll do original target versus, we'll call this like, this is like a workflow diagram, right? Original and new. Okay, so this is your initial target, you reach it, right? So in the decision tree, now you have to say to yourself, okay, do I have room here technically for a new target? Okay, so this is where your technicals come in, and you have to decide based on price action, based on order flow, based on all these other parameters, okay, is there room for this trade to go higher, right? If we were overbought on a two-wave corrective snapback into a declining 15-minute 200, none of this would be relevant, right? I would be exiting into an obvious area where I expect sellers to come in. But this is in a clear technical breakout on multiple time frames. So this decision making comes into mind, and I have to decide, right, okay, how much money do I need to take off this trade in order to, fully finance my risk, take the profits I was looking for, and how, what should I leave on in case we tag, 137.50, 138, 139, etc., right? So that's the point where I make that decision. And then you have to use whatever technical criteria at your disposal to decide. Some people will exit on the first break of the 5-minute, the 5-minute 8. Some people will exit on 2 consecutive lower lows, right? Both of those would have gotten you out around here, which is where I ended up getting out. I initially set up 1-minute trailing stop. I went for coffee, came back, and I tightened the stop because I was here. So you have to make a technical decision, right, after you've made your money management decision. Does that make sense? So, as far as this trade example that you gave us, right, that is the way to do it. The problem is, if you don't manage money and risk properly here, right, this is what maybe a novice trader will do, okay? So a novice trader might, take this breakout here, take it late in the 5-minute candle, it'll stop them out, they'll miss the inside bar, they'll buy the top of this bar, they'll stop out here, then when it finally clears this bar, they'll buy the top of this candle, then they'll come back, they'll be panicked, they'll stop out. In the meantime, the breakout continues, and you're just basically buying the top of a candle right before a minor retracement, right? So finally, it goes out here, you missed it again, you're all FOMO'd out, you're frustrated, you're telling yourself, I don't know how to trade. So you say to yourself, okay, I'm going to buy the top of this bar with a tight stop. And the tight stop actually stops you out. And finally, in a fit of rage, without realizing you're buying this into a major level of resistance, you take the top of this bar and whoosh, sellers come in, and you ride this all the way back down here, and you tell yourself, man, I don't know how to sell rugs. Sound familiar? It sounds familiar to me because I used to be that guy. All right, so the best way to prevent that emotional state and that emotional cycle is to have proper entries. And when you have technical viability and you reach the end of your decision making tree where you've hit target and so this is your workflow diagram, right? You've hit target here. You have to ask yourself, exit completely or leave a runner, okay? If you make that decision properly, right, based on the technicals, then you have the capability to leave a runner. You have some positive emotional feedback because you're still participating in the move, and you've also managed to lock in gains and totally finance the risk on the trade. Okay, so everybody is AC 2000. That's just, that's how trading works. We're all very different, but we also suffer from the same ailments psychologically and analytically. So that, I think that is important. So you said, I know the solution is to stop being an idiot and manage money better. but while I'm learning to better manage winning trades, any tips on the mental side? Yeah, like I said, I think you need to, uh, I think there's a lot of self doubt, right? So you're doubting yourself when you're doing things incorrectly, and then you're doubting yourself when you're doing things correctly. And when you're in the right trade for the right reason, and you have a winner, okay, and you're going into leg two of the trade, what would help me mentally overcome that was properly managing money in the trade, so that my risk was managed easily, right? If I have a 135.03 entry and I'm out half by 137.61, okay, I've got $2.50 worth of risk already in the bag, and say I take 70% or 80% of the position off, right? Uh, that's for most people, it's going to make it dramatically easier to let the trade work, right? Make sense? So I think that is a big thing. And then you said our tips on what to do when all the merchants are selling to tourists and you have no inventory left. I'm not sure how to extrapolate that particular um, line of thinking. I don't know what you mean by you have no inventory left. What do you do with these instances? Look for reversal, scalp smaller time frame. I'm not sure when the bulls are running. Well, like, okay, for example, if I were a late money long into 137.73, right? What I do is I take this chunk of price action and say, okay, this trade is good for this chunk of price action. I'll literally take the measured move out of the last two bars and say to myself, okay, we've got to move to R3. So if I'm a late money long on the 5-minute chart on this hot dog break, I'll say to myself, okay, this is the potential for this trade. Okay, I miss the early move. Okay, and if I swing for the bleachers here, okay, and I set a $147 price target, I'm most likely going to find a lot of disappointment. So stop under this bar, entry above this bar, target at R2. This is a solid base hit, right? So if you're a late money long, if you miss this entry and you miss this eat the tail trade, and you find yourself here midway through or 3/4 of the way up the opening drive, and you want to still take the momentum play, knowing that you're a late money long means for me two things. One, right, lower tier size. This is still a high probability trade. Okay, it just means I'm gonna lower my tier size, and number two, okay, my expectations are diminished. Right? We are, in terms of the average daily range of AMD, we're at a quarter tank, right? If you look at this prior day's action and you extrapolate to this move here, and you're taking this inside bar break, mentally you're going to be a lot happier trader knowing, okay, I got a little bit left. This is a high probability trade. We cleared the R1 pivot. This is clearly in a piercing reversal with a strong opening drive. Price action wise, it's a bona fide breakout, but I've got the end of the measured move here and R2 here, so I'll take this for what it can give me, right? So I hope that helps. If there's things I didn't address here, let me know. Can you go over measured move in this example? Yeah, so the measured move in this example, okay, is this leg here extrapolated to this leg here, okay? These are up thrust, not up thrust, but they're impulse moves within the channel, right? AMD has basically been doing this angle of ascent since December 7th, since Pearl Harbor Day, right? So Uh, these, I look at these, okay, you see that they're almost, you can almost make, this is almost a parallelogram here. Do you see the symmetry? Okay, these are the same people buying the same stuff, okay, just on a different day. Okay, so here they went shopping here today, they took a break. You notice this compression basically tells you there's no people willing to sell AMD on this day other than under 134.07, right? AMD is in a markup. When it gaps lower, right? Buyers come in because they see a deal. They're like, oh wow, AMD on sale. Did that sale last a very long time? No. We saw urgency to buy in the form of a piercing reversal that took these prior buyers out. Price increases, momentum is created through the imbalance between buyers and sellers, and you see the next top of the channel be fulfilled, right? That's why when I was looking at AMD today, I said, okay, guys, when we were approaching 138.50, 139, I said, okay, guys, I think this is the end of the line here because I was looking at this line, okay? And sometimes you go a little over the upper line, but not by very much usually, right? You see that? So, when we're in phase D of the price cycle here, and you have a mature markup in place. It's very common to see your markups in perfectly parallel angles of ascent. This is orderly buying, right? You know what I mean? And when the big buying is over, you drift lower a little bit. They're gonna test this angle, this pivot here, and most likely keep taking it higher. Okay. It is convenient. If it is convenient, could you start with an empty daily chart of MTB? MTB, sure. Let's go to. I don't think I trade that one, anyways. All right. On the daily time frame. Okay. So, let's see here. MTB on a larger time frame. MTB is in a multi-year range. As you can see here, you had a distribution top, two-wave corrective to the midpoint, right there, right? If you go ahead and profile this thing, you'll see point of control is, yeah, well, a little bit higher above the midpoint. So you broke point of control here, had a two-wave corrective, a bounce at 142.80, and then you have a slow schematic here on the daily in the form of a W bottom. So, this is a chart that basically has been going sideways for 6 years. You like it long for a swing? Okay. So your W bottom is your slow schematic. Now you want compression or a shakeout, and you have a move to point of control up at 167.04, potentially 188.19. Your expectations of AMD and Tesla price movement and highs for tomorrow. I have to look at AMD again. So I think AMD's 152.30 is within sight. So AMD's been stair stepping higher here. So let's take out all this garbage. So you had your selling climax here, then pop, falling wedge. You have A, B, C pivots. This created a bull micro channel. You had a bit of a blow off top here after earnings, a falling wedge back to the bottom of the channel, like so. A little bit of a W bottom. This was your shakeout and your two-wave corrective back to the top of the channel. So at this point, what I want to see is for AMD on the hourly or the daily to start consolidating sideways, you know, compress, you know, start absorbing any prior sellers and make its final leg. So 1, 2, and 3 out of the channel to start to challenge those sellers at 150, 250. So that's AMD, Tesla. It's still in a wedge. I'm disappointed that to see so much weakness in it today, but it's still doing, you know, it's still in the same consolidation. So you have this prior declining tops line, this rising line held. You can see a shakeout bar here near the lows, right? This bar, you see this little topping bar, bottoming tail here, right there. That's that demand zone at 233.80 that we were covering into. Remember that we were covering into this level on the daily, guys. On the daily, that's this ascending trend line. Okay, you see that? So that's why multi-time frame analysis. If you're a member of this room, you're probably rolling your eyes at me saying, you know, JR, you've said this a million times. But if you're newer to trading, or you know, you don't trade this way, these ascending lines on the daily, they're very important intraday. They mark clear levels where buyers are coming in, and we're still building a cause here, right? We're compressing, we're chipping away at, trying to chip away at sellers here, trying to chip away at buyers here, and this is eventually going to break in one or two directions. I think higher, but we'll see. AMD's your new girlfriend? Hey now. All right. Are we competing against institutional traders at banks, pension funds, hedge funds, insurance carriers, etc.? You're competing against the robots. Yeah. I mean, when you say buy, who is selling to us? Most likely a robot. Most of the time. JR, I trade NQ using levels and tick charts with 80% accuracy during range markets. Today we trended and I found myself in the middle of the ocean. Okay. What is a good way to trade trending markets without losing that accuracy? What is a free way? What is a free way to perceive order flow? I don't know of a free way to perceive order flow. I mean, you can usually, I mean, just looking at candlesticks volume and time and sales, you have the ability to perceive it pretty well. So, you know, a lot of people like to trade range-bound markets. The way we traded the Qs today, right? We called that along here, right? And we said, okay, guys, the change of character in the market, remember that, was at 397.40. And that gave you your end of day trend. So how do you trade this? Well, I mean, if you want to capture trends, typically in a trend, you want to buy turnaround bars off of key levels. You want to buy shakeout bars off moving averages, etc., etc. We go pretty heavily into trading trends, John, in Momentum Mastery, and it's a whole topic. But yeah, key awareness of overhead supply zones and moving averages and angles of ascent is necessary. I find trading trends way easier than trading anything else. I mean, members of the room, what's this? This is a price action template. Yeah. What are the two things that follow an inverse head and shoulders neckline break typically? Two things that could happen here. Two-wave corrective or what? Two-wave corrective or a channel, right? Yeah, with the two-wave corrective, sometimes you get a retest. Yes, that's true. But basically, in terms of price action narratives, right, you have an opening range drive, a flag, a second leg, a pullback retest of the pivot. That gives you the two-wave corrective that forms a neckline, okay? And there's your channel. That's why I was saying, you know, guys, watch watch the break of 297.40 because that is going to be, the neckline break and the change of character, the breakout in the market, and that's when we started just channeling higher. So John, all these price action templates, they're very much formulaic in my book, as far as what the market does in terms of each potential price action instance are detailed in our Momentum Mastery course. They're price action templates. All right. Why do you never use the 30s, 1 minute, 3 minute, or 10 minute? And what's the 65-minute for? When I'm trading news flow, I use a 1 minute, Shane. It's a useful time frame for. It's a useful minute for time frame. It's also a great useful time frame for losing a lot of money if you don't need to use the 1 minute. So I typically use the 2, the 5, and the 15. There's absolutely nothing wrong with using the 10-minute chart. I think it's a good time frame for sure. And some people like the 3 minute as well. I have nothing against it. I just use the 2 minute. All right. And that's typically the for the morning, for accuracy in terms of my entries, I'll use the 2 minute. Other than that, I prefer the 5. I think I just have a problem with patience after getting stopped out, waiting for another play. Nobody likes to get stopped out, and nobody likes to sit there and watch their P&L red without doing something about it immediately, right? People like to, when people take losses, type 11 if this is the case, you take a loss, you feel this burning desire to start hitting some buttons so you can make that money back immediately. Okay? That's the equivalent of falling into quicksand and start to trade, start to think, okay, I can beat Michael Phelps's 50 meter freestyle record in the quicksand. What do you think is going to happen if you struggle in quicksand? You've all seen the Tarzan movies, right? You sink deeper and deeper. Yeah. So one thing that really helped me overcome that was to start thinking of my performance on a weekly, monthly, and quarterly basis, and stop really caring about whether one day is red. I don't care if you have a red day, as long as it's manageable. If you trade well and you have a manageable red day within your risk parameters, say you have your max loss on the day is $500, and you tell yourself and you tell me, I did everything I was supposed to, I followed my game plan, the trades just didn't manifest today, I would say, okay, figure out what happened, and if it was just the market, then that's what happens. But your success is predicated by two things: your ability to stop. The ability to stop is a superpower you have to develop, okay? And the ability to wait. Your success should be measured in weeks, months, and years, not days. If you have a small red day and you did everything you were supposed to, you are trading well. I know it sucks, especially when you don't have a lot of confidence and you're not sure that you're doing the right things for the right reasons, and you're not sure if you can make it in this business. You use ending green on the day as validation that you can do this, okay? And I'm telling you right now, that particular impulse is what breaks half the traders I know, what has literally flushed people out of the market. Has this ever happened to you? You're down, I don't know, say your max risk is $500. You're down $7,800 on the day. You've blown past all the stops. You've basically done everything but sacrifice virgins to Moloch. And you get back to plus $1 on the day, and you feel like Pele after the 1972 World Cup. Why is that? Why is it that you feel so great? Is it because you avoided a giant red day that you should have never put yourself into that position? Or is it because you're like, wow, I finished green, I can do this. And in the meantime, you're a disaster. Right? I'm not saying you, John. I'm saying, you know, you're trading like a hot mess. So uh, this is a marathon, not a sprint. It requires a very measured, disciplined, dedicated effort. And if you have a small red day, man, that's so easy to overcome. Like I have traders who have big red days, and it then takes them 2 3 weeks to make it back up, and then they learn the hard way. They just let a small red day happen, and within 3 or 4 days, they've made 5 times the amount that they lost on that one red day because they've learned not to take big red days. When you take a big red day, man, you're taking a giant chunk out of yourself, not just in terms of money, but emotionally. Do you think you're going to be able to trade correctly for the rest of the week or the month if you had a 10% drawdown in your account in a single day? That's not trading, man. You're supposed to, in this business, your P&L can look like this. It can look like this, right? But it can never look like this. This is you bear flagging as a trader, okay? Because you have giant, like this should look familiar to you as a pattern in trading. Like when you see this happen, what are you expecting? What are you expecting to happen next? Up or down? Yeah. If your P&L looks like this, and then you lose $5,000, you make 50. Okay? When I see this person's account, I can tell right away that if they don't change their behavior, they're in leg one of who knows, right? So what you really need to strive for as an aspiring trading professional, right, is to keep your red day small so that you can keep your head on straight, and so that you can actually let your winning days make up for those losses, or otherwise it's just impossible to make it long term. So, anyways, end of rant. I heard only 5 price action movement types after an entry: big up, down, slow up, down, level. You agree? Um, I don't know what you mean exactly by that, Shane. There's a lot of different permutations depending on the price cycle. Yeah. Can you please, somebody email me, can you please ask your provider to use NQES March futures? I'm on the March futures right here. And I'm on the March futures and ATAS as well. I don't know what you mean there. Whose levels? Oh, yeah, no, I don't have any control over that. Um, I meant the bar quickly and slowly shoots up green. Oh, you mean on impulse moves? Yeah, probably. Nice, Eddie. Well done. Um, anything else you guys want to talk about? I'm happy to address any comments, any issues. Who do you use for footprints? I use ATAS right now. I've used historically Motive Wave. I'm trying these guys out. It's all the same. I like this a little bit better, but I don't know. How different time future affect to trade the now? How different time future affect to trade the now? I don't know what that means, Tom. I'm sorry. Uh, what is your favorite setup to trade and time frame? I really like shakeout bars and topping tails as exhaustion or auction reversals rather, and I really like big turnaround bar reversals. We trade a lot of reversals in the room. JP, if you like bottoming reversals, we catch at least 2 or 3 big bottoming and topping reversals every day. So I like those a lot. I really like also momentum continuation plays, like wedges, coils, stuff like that. Are responses saved after today for later reading? Well, this is being recorded so you can watch it again. Um, okay. Jared sent you an email. Oh, yeah. I got you, Jacoby. Hold on. I'll get to that one. All right, this is, well, I guess the anonymity is out the door. This is Jacoby. He's a really good trader. Let's see what he wrote us here. Okay, let's take a look. Let me read your email. Okay. Are there consistent rules of thumb for measured move targets for gap 1, 2, 3 breakouts via options? I've been trading them more frequently as swing trades and have general exit guidelines. First target 100%, second target 150. This is your return on the option, 200 and 150. Is that what you mean? Yeah. See, I don't care about that as much as I care about the technical level. And the reason for that is, Jacoby, that oftentimes, if the implied volatility isn't there, the stock will continue to grind higher, but the option won't move. You know what I mean? And so when it reaches target, I have to sell no matter what. Does that make sense? So that's I think more important to me. However, I was curious if you trade these setups, and if so, do you have a price target based approach? Yes, my approach is always price target based. Here's an example of gap 1, 2, 3 I traded this week in LUV. Okay, so this is a 15-minute chart. Okay, so you took the cheat entry off the bottoming reversal. Beautiful. This is an excellent entry, bounce off the 1-hour demand zone and break above the 15-minute value area, front running gap 1, 2, 3 breakout of 20. Excellent, man. Man, you've been putting on some nice trades. Exit half at 10.55. Double top reached 100% ROI target. Exit remaining one half at, this is all on the same day, right? Broke below the 5-minute. Okay, all right. High of day candle to de-risk and lock in gains. Okay, this looks really good. Is this LEV today? It looks like it. All right, so let's look at the 15-minute chart. Oh, so you entered it yesterday, and you rode the gap up, and you sold it right here. I mean, this looks well executed to me. Well done. GR target on HD covered call today, but not sure if it's got more room to go. All right, hold on a second. I don't know. Home Depot's been suffering, from what I understand. A lot of do-it-yourself people are doing less now. I mean, if I were long off the lows, I would be a definite seller here. Or are you selling? You're selling covered calls into this stopping formation. Is that what you're doing? I don't. I mean, who knows? This is where I would sell covered calls if I were long the stock, personally. Can you go over the generals for tomorrow? Yeah, definitely, Z. 1 second. For your option contracts, do you look for volume to be greater than open interest? I want the most traded, usually in the money option. If I'm day trading the weeklies, I'll take the most traded in the money calls or puts. How many monitors do you use? Uh, I have two giant 49-inch monitors where I mean you could literally fit three 27s in each one, and then I've got like two giant 36-inch monitors in portrait mode. If I was just trading by myself, to be honest, I would just need one 49-inch monitor or maybe two at most. But I run a room, so there's a lot of other stuff I need. You know. Uh, so yeah, okay. So Z wants to go over Z Generals. Let's do it. Apple. Uh, we you know if Powell gives the market the green light go, I think we're taking out all-time highs tomorrow. Uh, you got to get through that 195.70 handle Z. Tesla, I'm still expecting this to break to the upside. 233.80 is the level. This is going to go in one of two directions, and when it does, it'll be big. I think it goes higher. Microsoft. Uh, so Microsoft was starting to look ledgy. This level, taking it out is important. 374.50. We want to see, this ledge break to the upside quickly. Starting to look mighty bullish there. Amazon, we got our daily buy setup. I should have probably re-entered. It's fine. Um, this one looks like 152.50 and 156 as early as next week or this week for 152.50Z. It looks very strong. I really like this Amazon. Was even a good overnight candidate today. Google is lagging, obviously. I just see range bound on this. Google, AMD, not technically a Nasdaq general, but what the hell? I'm looking for like 150, 152.50 in the next few days, maybe into next week. Meta, it's near the top of the prior channel. 342.50 is next. My opinion, not barbecuing or trading advice. Nvidia, 482.50 is the next stop. You're now back over these prior VWAP anchors and also above the pivot high anchor. Oh no, you're not. You're right there. Okay. So yeah, over 480, you have probably 42.50 and then 46.5. Looks good. This has just been basing here, absorbing sellers in the 470s. I think it's getting ready to go. We talked about Meta, Netflix. I don't know. You tell me what this means. It looks like a Klingon manuscript to me. I'm tired. I'm done with Netflix. Yeah, so that's the generals. All right, so that's what I got, guys. Let's go over the calendar for tomorrow. See what we got going on. All right. So we've got PPI final demand at 8:30. That could be market moving. Let's see if it more or less confirms what we've been hearing or what we've been seeing from the CPI print. And then we've got Atlanta Fed business inflation expectations at 10, an EIA nat gas report, or sorry, the petroleum report at 10:30, and the 800-pound Powellzilla in the room, the FOMC announcement, quickly followed by the man, the myth, the banker, Jerome Powell at 2:30 for his prepared remarks and Q&A. All right, so that is what we got going on tomorrow. Excellent session today, guys. Great teamwork. I thought we were in some really nice trades. We'll be back tomorrow between 8:45 and 9 for a start. Have a fantastic evening. If you have any questions about the room, please email Amber at info@t3live.com. If you have any questions that I didn't cover today, jr@t3live.com. Have a fantastic evening. We'll see you guys in the morning. Take care, everyone. Victoria Rybakov.